first quarter 20 and 22 performance review. This section will run about 45 minutes including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite INDORAMA Venture Public Company Limited to start the presentation, please. Thank you very much.
Thank you. So Radna, would you like to start the presentation?
Yes, sure. Thanks, Vikash. Thank you, everyone, for joining us this afternoon. We'll take you through a brief introduction of IVL and then open it up to your questions. So IVL today is a platform of companies serving a wide variety of end applications and end markets, but an important commonality that you see across all of IVL's products is that we serve end applications that touch your everyday life, whether it's the PET resin that goes into your food and beverage packaging, the fibers that go into your baby diapers, the airbags in your car, the clothes on your back, or the surfactants that go into your detergents and shampoos that you use. We are very close to your daily life and in products that are categorized as necessities. And this is one key source of the resiliency of our platform. And this was even further amplified over the last 2-3 years during the COVID pandemic, where demand for the majority of IVL's products remained steady and in some cases even grew, such as in hygiene fibers. Next slide, please. IVL has been built across 3 main themes, which you see on the slide. The first is global footprint. Second is the integration through our value chain. And thirdly is sustainability across our product portfolio. And let's go into each of these. Next slide, please. IVL has a unique geographic footprint. We are located in 6 continents and in 34 countries. And you can see here the wide range of our far-reaching presence across the globe. And our strong presence specifically in Western markets further helps us enjoy premiums over and above Asian or Chinese benchmarks, which dictate the industries that we serve in. IVL has always believed in the strategic advantage that comes with our geographic footprint. For example, the local access that to customers, which allows for unmatched service quality, and it also allows for much more efficient logistics and agility. And in the world today of supply chain disruptions, this has become even more important and even more appreciated by our customers. And then, of course, it also gives us a structural advantage, such as feedstock access. For example, in the US, the benefit that we get from being close to shale gas. Next slide, please. The second pillar I mentioned was integration. And we have a high level of integration within and across our businesses, which we feel is another big competitive advantage. Integration allows us to capture more value chain margin and create significant barriers of entry. You'll notice on this slide the feedstock integration that you see in the middle. We are 81% integrated into PTA, which is one of the key raw materials for polyester and PET, and also 41% integrated into MEG, which is the second most important raw material for our products. And then on the bottom, you'll see in green our biomass and circular feed integration. And this is an area that we will continue to grow and will be gaining a bigger focus over the next years. We also came out recently with our Vision 2030 with the aim that by 2030, 1/3 of our feedstocks will come from biomass or recycled PET. And on the right of this chart, you see the applications with the majority going into food and beverage packaging and home and personal care products. Again, necessity products. Next slide, please. IVL is organized around three self-managed business segments: combined PET, IOD, and fibers. And we're proud to say that in each of the markets that we play in, we have achieved market leadership. In combined PET, we are the leading PET company in the world, and now also leaders in PET recycling. In the IOD space, we are the most prominent name in surfactants, ethylene oxide, and ethoxylation in the Americas. And this is a position that has been even further strengthened with the recent acquisition of Oxiteno, which is the largest integrated surfactant producer in Latin America. And then on the fiber side, we are leaders in tire reinforcement and automotive safety, in hygiene fibers and nonwovens. For example, 1 in every 2 premium diapers globally has IVL yarns. And then also leaders in the lifestyle polyester and yarn space. And what's important to note is that in each of our 3 business segments, we've created a strong foundation, a strong base, but at the same time with strong growth opportunities going forward. Next slide, please. And then the third pillar I mentioned was sustainability. We have launched the Deja platform, which is our sustainability platform in which all of our products that have a sustainable angle are showcased. And what you can see in the slide is that it is coming from each of our 3 business segments. Whether it's recycled PET or biodegradable crop solutions or innovative fibers that produce unique properties. We are focused on this across the entire IVL platform. Next slide, please. And if we just speak about PET specifically for a moment, PET has really stood out as the material of choice in terms of both sustainability and for its affordability that it provides. And this is when you compare it with aluminum cans and glass bottles, which are the other main materials used for beverage packaging. PET, as you can see in the slide, is twice more cost competitive than glass and 30% more than aluminum. And it also has the lowest carbon footprint among the 3 packaging materials. And finally, it's also the most versatile. It can be used for all single and multiple use packaging sizes, unlike aluminum and glass. And so these properties really present a key advantage for our customers and has been something that has been well appreciated by the brand owners and our customers worldwide. And so we see a lot of growth coming for PET as well as specifically recycled PET. Next slide, please. PET, if you compare against other plastic, also stands out as a unique plastic. This is for one reason because of its 100% recyclability, but secondly also because of the property of being fully circular, which means that a PET bottle can go back into being made into a new PET bottle without losing any of its functionality or of any of its properties. And this is where it really truly stands out against the other plastics. So now at this point, I'll hand it over to Vikash to take you through the following slides. Thank you.
Thank you, Radna. So talking on the sustainability, we have given our targets for 2025 and 2030. So 2025 on the recycled PET, which is a circular, the full circular PET, is 750 KT. By 2025, we are going to recycle, and around 4 times more by 2030 to 3 million tons. In the biomass feedstock, we don't have any target yet for 2025, even though we do have biomass. The deal of Oxygen, which just got completed in April, have 20% of its feedstock is coming from biomass. And 2030, we have a target of 2.4 million ton. This is where we get to 1/3 of our feedstock with 3 million ton of recycled PET and 2.4 million ton of feedstock biomass. We achieve 30% of our biofeed and circular feedstock by 2030. Our GHG intensity to reduce scope 1, energy intensity reduction, there are many projects, so we have the targets for that. Again, for reduction of scope 1. In scope 2, renewable energy consumption, we are going to increase by 10% to 25 and about 25% in 2030. And this, we have different projects we are doing. And then water intensity reduction, again, we have a target of 10 and 20% by 2030. We are going to also announce science-based targets very soon. So we'll let you know once we announce those, but it is very much very close to announcement. Let's move on. So talking a little bit on the recycling. So you can see that today we are collecting 12% of our bottles that resin we are selling to the market, and then we collect. It gets converted into bottles by our customers, and then we collect 12% of that for recycling. So we are not actually collecting; we are purchasing from the collectors, but we are recycling them. So around 12%. And this we expect, we aspire to take it to 48% of all the PET that we sell in the market that goes into bottles. We expect to recycle them around 48%. And this is in line with the targets of the customers. Like if you follow Cokes and Pepsis and all these brand owners, they all have given out targets of 25%, 30%, 50% by 2030. And this is in line with the targets to align with our customers. Next slide, please. A little bit on decarbonizing our product to biomass. So we are talking here the natural alcohol, the fatty alcohol, which comes from palm oil in Brazil, and bioethylene, and also bioparacetylene is evolving. So Brazil, as you might know, we have just completed a deal of Oxygen, and before that, we had investments in PET and fibers. And today, Brazil, as a one country, is our second largest investment after US in IVL. And it's very strategic location, and we are quite excited about the biomass projects over there and other parts in the world as well. So you can see here, today the biomass is 1% and 7% from rPET, the recycled feedstock. And by 2030, we expect to 16% of biomass and 21% of rPET being our feed. And this increases our circularity and all our sustainability, and as well as reduces the scope 3 emission significantly. Next slide, please. So on our decarbonization, we have a dedicated organization. So we have decarbonization committee, we have ESG council, and they report to the board as well. So in the decarbonizing committee, we have the 3 segments, as you heard, and the CTOs of those segments. So they are heading this decarbonizing committee, and then they have the managers down the line. So they are running the projects. So just to give you some idea, so we have operational eco-efficiency projects. So we talk about green projects. You might know that we are in 34 countries, about 125 plus operating sites. So we have a lot of projects that we are doing green projects, and that is reducing our emissions. Coal phase out. So we have an organization we have identified within the company who is looking at phasing out the coal. We are using some in Thailand, Indonesia, and so it's mainly in Asia we are using. So we are phasing it out in next 6 to 7 years. Green hydrogen, we have a project in Portugal, which is 80% funded by the Portuguese government is subsidized, and we are doing that project, and then we are going to roll it out at other locations. Carbon capture, as you might know, that is a new technology which is coming out, and we are doing one project in Texas in the US. It is quite a big project, but not only we are capturing the carbon, but we are also planning to add value by making products out of it. For example, like ethylene carbonate. So we have the carbon that we capture, and then we react it with ethylene oxide that we have in the US, and ethylene carbonate that goes into the batteries application for electric vehicles. So that is one. Other thing that we are looking at, that for the carbonated soft drink for our customers, how we can make it a food grade carbon, and that can be used in the beverages. So just to give you some examples that we are looking at. Renewable energy, we are looking at solar farms. Like in Asia, it is quite a good projects, because the capex is very low, and in some cases you don't have any capex and you have just a revenue sharing, and net basis it's lower than the grid. So quite efficient model in Asia. And in Europe and Americas, we have the virtual power purchase agreements and other forms of renewable energy. And this is where we are looking at different projects. So a lot is going on, and there's some capex that we are doing, almost like $500 million we are going to spend in the next 3 to 4 years. And we expect a payback of around 4 to 5 years in all of these projects. Next slide, please. So our first quarter results is already out. So $650 million we reported as normalized or core EBITDA. Our reported EBITDA was higher than this because of inventory gains. So this year the outlook is pretty strong, pretty healthy. We have a shale benefit in the US. As you might know, that in the US we have certain feed for our business which is coming from the gas, and the end product is like either they are fixed margin or they have the oil price driven economics. So there's a good arbitrage on that. So we are benefiting with that situation. Our biggest segment, PET, integrated business globally. So we have reset our contracts in Europe and America at higher levels for 2022. So that is going to be reset for the full year. So we are going to have a better margins in that area. Expensive sea freight. So we are a domestic business company. Like we are very global, but we have domestic footprint, and we price our products on the import parity. And imports are very expensive, as you might know, with the expensive sea freight, and also the last mile delivery, the truck driver shortage. There's a huge shortage of manpower in many countries, and this is making imports expensive. And we have our domestic premium because of that. And then the strong dollars. It is good for the company because we operate in emerging markets like Turkey, Indonesia, India, Brazil. So these countries, we have the business, the margins are in dollars, but the conversion cost, they are in local currency. So it helps. The conversion cost goes down in dollar terms. So these are the few like the growth drivers for this year. And for the next 2 years, we see Project Olympus. This is our efficiency gain project. We have about 2,400 initiatives we have taken under these projects. Some of them are sustainability projects. Some of them are efficiency enhancement projects. So that is going to drive earnings as well. We have $4.9 billion capital in progress, end of 2021, and some pipeline capex that we are planning for the next 2 or 3 years. So that is going to generate new earnings. And then our global model, as Aradhana mentioned, this disruption that's going on in the supply chain and all of that. So the customers are preferring the shorter supply chain. And this is where we fit in, because we are present in all the major domestic markets and we supply to our customers on a regular basis. Next slide, please. So some of the capexes, as I mentioned, 4.9 billion. So you can see end of 2021, we already have 1.9 billion, which is spent already, and they are just waiting to start in 22 and onwards to contribute. 2022, our bigger project is Oxiteno. We completed in April, and is going to contribute for the first time in second quarter and for the rest of the year. So this deal is running at an EBITDA of $211 million in 2021, and in the first quarter it contributed $66 million. So it's doing pretty ahead of our budget. So outlook is also pretty strong on this part of the business. In Oxiteno, they make surfactants, they make biosurfactants, and mainly they are in Brazil and also in the US. Their plant is very new and it's ramping up. So, and then we are investing in sustainability and recycling projects. Corpus Christi is one of the projects which has an integrated site of PET and PTA that we acquired many years back. So due to COVID, with our 3 partners, it is a joint venture. It was put on hold for some time, but now all the 3 partners have decided to start the construction, complete the construction of this project, and bring the project online by second half of 2024. So that is going to contribute. So we are quite excited with the pipeline capex, and you can see that 2022 after Oxiteno, we don't have like such a big capex in the pipeline at this time. Because we always take like 6 months, 12 months, 18 months, almost like 12 months of time to consolidate before we take up any major big projects. Next slide, please. On our gearing net debt to equity ratio, we always, if you see in the 4-year cycle that we operate, so since IPO, we already have 3 cycles we have seen, and our gearing is about 0.8 in the last 2 cycles. And at this time, we are still at 0.8, as you can see. And then, but the liquidity and the size of the balance sheet is getting bigger. And liquidity position, we always carry 2.5 billion end of Q1. We always have carried over $2 billion in our liquidity, which is cash and cash under management, plus unutilized banking lines. So this is very important when the liquidity is squeezing everywhere. We have committed lines, and these are like 5-year, 6-year committed lines. Our financing cost is 3.3%. 62% is fixed. So any rate hike from Fed, which is expected, will have a very low impact on our P&L. And also we have diversified global financing. We have over 50 banks. We are into debt capital market in Thailand and overseas. And also 20% of our net debt financing is with ESG link financing. That also gives our commitment to the market that we are quite serious in this area. Next slide, please. So a quick disclaimer, and with that, we can take up your questions. Yeah, thank you. I can see the Kun Palini from SET. She has written that if you have any question, you can type in the chat box. But I can see the 2 investors on the call. So feel free to please, if you have any questions.
Okay, there are no questions. The session has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you, investor and corporate, for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณนะคะ
Thank you.
Thank you. ขอบคุณครับ